Good day Forex trader. Your USD Forex Signal, no end in sight for Euro sell-off. The path of the least resistance for the pair is to the downside. Bearish view. Sell the Euro USD and set a take profit at 1.1300. Add a stop loss at 1.1500. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1532 and a take profit at 1.1600. Add a stop loss at 1.1450. The Euro-USD pair crashed to the lowest level since July 2020 ahead of the latest EU GDP data and US retail sales numbers. It is trading at 1.1415, which is about 7.6% below the highest level this year. The pair has dropped by more than 2% this month. EU GDP and US retail sales. The Euro-USD pair declined sharply in the overnight session as investors continued to worry about the rising global inflation. Recent data from key countries like Germany, China, and the US has shown that the world is going through a period of high inflation. Indeed, American and German data revealed that inflation has jumped to the highest level in more than 3 decades. As such, investors are relatively concerned about stagflation, which is a period of high inflation and low GDP growth. Meanwhile, recent data also showed that American economy recorded relatively slower growth in the third quarter. The economy rose by just 2% in the quarter after it rose by more than 5.7% in the previous quarter. Therefore, analysts will be watching the latest Eurozone GDP data scheduled for later today. The numbers are expected to show that the Eurozone economy expanded by 3.7% in the third quarter. On a year-on-year basis, the economy is expected to expand by about 2.2%. The next key data that will move the Euro/USD pair will be the latest US retail sales and export and import price indices. The retail sales numbers will provide more signals about the impact of high inflation on consumer spending. Analysts expect the data to show that the headline retail sales rose from 0.7% to 1.2% while core sales rose to 1%. Import price is expected to have risen from 0.4% to 1% while the export price index is expected to have fallen to about 0.9%. Euro-USD forecast. The Euro-USD pair made a major bearish breakout last week. At the time, the pair managed to move below the key support level at 1.1532, which was the previous year-to-date low. The pair accelerated the sell-off on Monday. As a result, the stock has managed to move below the 25-day moving average. It is also along the lower side of the descending channel shown in purple. The stochastic oscillator has also moved below the oversold level. Therefore, the path of the least resistance for the pair is to the downside. The next key support to watch will be at 1.1300. Gbp Usd Forex Signal, bearish signs ahead of key UK data. The pair will likely resume the bearish trend ahead or after the UK jobs numbers. Bearish view. Sell the Gbp USD and add a take profit at 1.3310, S1. Add a stop loss at 1.3500. Timeline, 1 to 2 days. Bullish view. Buy the Gbp USD and add a take profit at 1.3550. Add a stop loss at 1.3350. The Gbp USD pair was little changed in early trading as investors waited for the latest UK jobs and inflation data. The pair will also react to the latest American retail sales numbers that will come out in the afternoon session. It is trading at 1.3437, which is about 0.6% above the lowest level last week. UK jobs and inflation data. The Office of National Statistics, ONS, will publish the latest UK jobs data in the morning session. The numbers are expected to show that the country's economy continued to add jobs in September. Precisely, data by Reuters show that the economy is expected to have added more than 185,000 jobs in the 3 months to September. The unemployment rate is expected to have dropped from 4.5% in August to 4.4% in September. At the same time, Analysts expect the data to show that wages remained steady in September as the economy continued to recover. These numbers will come at a time when political temperature between the EU and the UK is rising. The UK has asked the EU to renegotiate the Northern Ireland part of the Brexit deal that Boris Johnson signed a year ago. Failure to which, the UK has threatened to invoke Article 16 and implement tariffs on European goods. Such action will have negative implications on the British economy. Later today, the Gbp Usd will react to the latest American retail sales numbers. Economists expect that the data will show that the country's sales rose from 0.7% to 1.1% on a month-on-month basis. Core sales, which excludes volatile food and energy products, are expected to have risen from 0.8% to 1%. Meanwhile, traders will also be focusing on the important UK inflation numbers that will come out on Wednesday. The data will likely show that the country's inflation rose to more than 4% in October. Gbp Usd Forecast. The Gbp Usd pair has made an uneasy recovery in the past 2 trading days. It has managed to rise from a low of 1.3352 to a high of 1.3440. The pair has risen above the October low of 1.3415. It is also approaching the standard pivot point and is attempting to move above the 25-period moving average. Therefore, the pair will likely resume the bearish trend ahead or after the UK jobs numbers. If this happens, the next key support level will be at the S1 point at 1.3320. AUD USD Forex Signal, beginning consolidation. The Aussie weakened slightly from the dovish RBA minutes. Last Tuesday's AUD USD signal produced a very profitable short trade from the bearish reversal by the inside bar, which rejected the resistance level I had identified at 0.7430. Today's AUD USD signals. Risk 0.75%. Trades may only be taken prior to 5 p.m. Tokyo time Wednesday. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7390 or 0.7430. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7321 or 0.7267. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD USD analysis. I wrote last Tuesday that a long trade generally did not look like a good idea, and that the resistance level at 0.7430 did look quite strong, so it might provide a short trade. I was prepared to go short if we get a firm reversal off that level, which we did. The picture now shows the former large swings up and down in this currency pair beginning to narrow, with the first signs of a consolidation pattern emerging between 0.7321 and 0.7390. The Reserve Bank of Australia released the minutes of its most recent monthly meeting a few hours ago, with the key takeaway being that the RBA does not expect to raise its interest rate in 2022. This, as expected, has had a small dovish effect on the Aussie, but nothing really of any technical significance above a scalping kind of time frame. If I am correct about this consolidative atmosphere, the best opportunities ahead in this currency pair will be likely to be either a long trade from a bounce at 0.7321 or a short trade from 0.7390 again. I prefer a short trade as the US dollar is in a long-term bullish trend, meaning a short trade should be likely to have a higher chance of producing a better result.